Jersey City. Let's come back here to Chicago, go down to the pits of the SIBO where the VIX trades, which is currently right now at just below 60. Alan Nuttman is the chief market strategist at Agora Financial. Alan, over the last 30 years, we've only seen this level of VIX twice. What are you doing as a result?
Right. Well, I'm a trader. We'll get to that in a second. But what I want to talk about is how calm and quiet it is here. So this has been an orderly unwind. Now, if we look at it, we're down 5%.
It's calm and quiet. I heard someone blew up down there last week. A market maker lost their hat and got carted out on a gurney.
It's very orderly. It's a very orderly sell-off. It's not anywhere near, I'm not even going to use the word, but it's a very orderly unwind as it stands right now. We're down 5%.
We gapped down, Alan. We hit the circuit breaker, first time since 97.
That's the design. That's what gives us that stability and that calmness to make decisions where you're not just, getting very emotional and having a freak out.
Okay.
So, as a trader, let's see where we are after the 1 hour rule. Let's see where we stand after this first hour. If those lows were made and it doesn't go below those opening lows in that first hour, then oftentimes the markets try and fill in that gap. So we'll look to see what happens here. We're also off the bottom when it comes to treasuries, and we're off the top when we get into gold. So there's a lot of signs that as it stands right now, may have been the worst of it. Let's see where we are after the first hour. That's how traders look at things.
Okay, and Alan, by the way, I like the perspective here from your trading perspective and the rules you're using to see and gauge step by step here. So we'll check after the hour open. And to your point, we're coming off the lows since we got back after the circuit breaker. Hey, you're at the SIBO right now. Actually, it was last week I heard a report. I know everybody was reading this. It was all over about the market maker at the CME. Do you know anything about this? Apparently, someone was getting slammed, whether it's because they're long stocks or short bonds. But the point is, Alan, I don't know if you know details, but now we've got crude. First, it was bonds that were burning people on the short side. Then it was stocks that were burning people on the long side. Are we going to see people get taken out from their crude positions next?
Well, that's an old school way of thinking. When the markets weren't electronic years ago, they used to have to go physically take someone out of the pit if they were underwater.
Right.
And we called that blowing up in the situation. That doesn't happen anymore because risk control is so good. Your brokerage firm knows exactly where you stand at all times. Every second of every day they know where you stand. So yes, there are people that maybe ran through their account.
They published a feed that said someone got taken out in the SPX pit.
I didn't physically see that, but think about the move, the acceleration that we saw in treasuries. That's where I thought, a company, a firm, or a person, or a trader could get taken out.
Right.
That's the acceleration. No one thought
there's no
the
precedent for bonds.
With that momentum. Right, for bonds. I mean, that's just that. I've never seen anything like that. Bonds used to have a 3-point limit in treasuries. What were we up last night? 9 at one time? Wow. I mean, it's unprecedented move. But let's get back to that. So coming into today, there was an 85% chance there's going to be another half-point cut by the March meeting. That'll bring us down to 0.25%. There's about a 40% chance that we're going to be at zero rates by December. But we don't have a going to help anybody, in my opinion. That's maybe just a confidence builder, but that's not, we're not having a financial crisis because there's not enough money floating around right now. Some would argue there was too much money floating around and it had to go into the stock market, even though, for some people that wasn't appropriate. But I'm a trader. There's always opportunity. There's going to be sectors and stocks that move up in down times, and there's going to be sectors and stocks that move down in up times. Today is the 11-year anniversary of the bull market, okay? But we're going to be remembering today for different reasons.
Wow, it's March 9th. You're right, Alan. It is to the day. It's amazing. I didn't even realize this because, look, now the question is the trend changing?
Reasons, most likely.
Does the trend change, Alan?
I still don't. Can't make that decision. I look at things on a weekly basis. Let's remember, last week we came all the way back and closed positive on a wild, wild week. We had two of the biggest Dow days on the upside in points in history last week. So, I have to look at things on a weekly basis. And again, I'm not going to, I'm going to say there are people in the administration that are going to pull some more levers to do anything they can to support the stock market. Now let's talk about that.
By the way,
obviously,
there's another report that the president is going to meet and they're going to talk, and there might be a presentation, there might be a press conference coming today. That was from a Bloomberg headline about 10 minutes ago.
Let me give you two things. Well, three things. Number one, I told you in the last couple of weeks the next lever is the dollar index. The dollar index is now here down at 1-year lows after making 3-year highs just a couple weeks ago. All right, that's the next lever, okay? Because that helps exports around the world. Well, we can talk about whether those customers are going to be buying anything. Lever to support stocks, okay? The other two levers are this. The administration could eliminate capital gains taxes, and then it could also incentivize 401ks, and I'm going to bring up the word, Social Security plans on this administration to support the stock market, okay? We all know what their bias is, so be aware, there's always a price pop potential in the stock market because they can come up.
It's going to be your cue to then feel more hopeful. I mean, in the meantime, you were a bull here, Alan, when this market was ramping. Viewers want to know.
It was only 3 weeks ago we were at all-time forever highs. You know how quickly the sentiment in the markets can change. Somebody's going to look at this at some point, and you're going to see some sort of buying. We saw a bit of it last week when we got up to that 31.25 in the S&P, which was the halfway mark of the drop from the top, but we didn't get any follow-through. So at some point, somebody's going to find some value here, and you have to see how the markets react, because that's really the key is to see, not to react, but to see how the markets act after they've had a major move.
Alan, we are so over time and out of time, but you had a precious metals trade for us, or do you want to get long one of the metals? Silver, gold, plate? I mean, like
silver.
Silver?
Silver. Okay, gold made 7-year highs, all right? Silver has had a major disconnect. The gold-silver ratio is at the widest it's been since 1991 for whatever reason. Silver has been trading sideways. I'm looking at WPM. It's been trading between 25 and 30 for about 6 months, and we're down at the 25 level. So I'm looking at the April 25 call. Trading about, we're trading at 29 or so it's $4 in the money. It's trading for about 5. So you've got some time. You got 40 days. Let's see how the silver market reacts here. Maybe there's some value at that level. But for me, it's about probability. It's a delta that's in 75%, and I know my risk, and we'll see if silver can start to play ball with gold.
All right. The birthday bloodbath. How about that? 11 years later. What do you think, Alan? You want to wager a title of what we're going to call this Monday?
I'm not so sure yet, but call me in about half an hour or so when we hit this 9:30 hour.
All right, the 1 hour rule.
I'll have a little better feeling. The 1 hour rule.
Alan, pleasure having you here over the past week. Alan Nutman's Chief Market Strategist at Agora Financial. We'll be right back. Supply chain questions are, of course, at the top of everyone's mind on what that means if it gets combined with the demand shock. Crude oil says that's coming. Equities are down. We're going to talk with the head of an ETF shop that has a bunch of leveraged funds. We'll see what's swinging the most.